Hey you guys, welcome back to Young Money Investments. In today's video, we're going to be talking and going in depth on how to find the right swing trades and how to be profitable consistently day after day, week after week, month after month, and year after year. We're going to be talking about things like how to time and find overall market direction, obviously using support and resistance on several different charts in order to time that swing trade correctly, and then what strategies I found work best to find those stocks that have been beat down but have a high probability of reversing and making you a lot of profit. Let's talk about it all today on Young Money Investments. Now, one of the biggest questions I feel like I get asked a lot is how do I find the right swing trade? How do I time the markets right in order to get in at the right time and make a profit on my trade? One of the hardest things as a swing trader is getting in and knowing when is the best opportunity to get in on a particular stock. In today's video, I'm going to go over the several steps. I was going to say 5, but it takes a few steps. I'm going to go over each and every individual process that I go through in order to find those right stocks. Does it always work? No, but does it work more often than not? Absolutely. And so we're going to get started right now. Oh, and one more thing as well. If you've not subscribed already, I know a lot of you that watch these videos have not subscribed. There is a ton of great, useful content. There's multiple videos being put out every single week. So please hit that subscribe button and it will help you to get this video more often, more of this great content that will help you become a profitable and better trader by taking in and soaking up and absorbing all this great knowledge. One of the first things that I always look for when I am going to get into a swing trade is finding the right stocks that have been beaten down, have actually went through the cycle. Basically, there is a several step cycle that makes a stock finally pop up on my radar and not just be in my old outdated watch list. The first thing is it does have to usually have a sell-off. It has to have had some sort of catalyst, some sort of negative news that has brought the stock down, whether that be earnings or whether that be some sort of bad PR stunt that went bad. When the stock sells off, there is usually going to be the sell-off portion. You're usually then going to see the bounce. You're going to get a small little, it's almost like a hook. And then usually you're going to see it sell off a little bit more. After that sell-off period, you're usually going to see what we call consolidation. Now, through this consolidation period, that is when the stock usually is trading on lower volume. And if you follow the volume candles, you're going to see during that massive sell-off, you're going to see a large spike in volume. And then you're going to go through this period where there's not as much volume. It's going to trade very sideways. And sometimes that trading can happen for several days. Sometimes it can be several weeks. Sometimes it can be over a month that the stock will then end up just sitting sideways before it ends up doing anything. A lot of people go, oh, well, the stocks, it's very simple and easy to buy and sell and make a lot of money. As soon as the stock drops, you just buy right there and ride it up. One of the things that I've seen that happens over and over with new traders is that they buy the dip too early. It starts to spike. They think they're starting to make money and then it sells off even more and they end up being down. One of the biggest problems, and we're going to look at that here on the chart, is that when that happens, they become bag holders, and becoming a bag holder is one of the biggest mistakes you can possibly make as a new investor or trader. After the consolidation period, you obviously are going to see the uptrend. You're going to see the bounce. Sometimes you'll see what we call the pullback or the confirmation. And after that confirmation, we will see it continue up. And that's where you're going to start using support and resistance. Let's show you an example here on the charts. A great example that we've recently seen here is ticker symbol BYND, also known as Beyond Meat. Now, this is a ticker that IPO'd at roughly $44 a share and has since run up all the way to highs of nearly $246. Since then, it had bottomed down here at nearly $72. And since then, we are seeing this thing at a price point of $116. And we have seen a massive run up. I mean, we're talking about a run up from down here. We're talking all the way up to 116. We're talking about a 61% run from its previous highs or previous lows, pardon me. So the question now becomes, how did I know and how did members in the private mentorship know that this was going to be a profitable trade last week? Well, the way that we knew this was going to be a profitable trade is because it fits that overall strategy, right? We see that it had overextended itself. It was way overbought, ended up going down, and it just went down and down, and there was no real end to this consolidation. As you can see, there was no consolidation period whatsoever. It found areas that it thought were support, like here at 145, but it would crack and then it would spike and then it would teeter on down and continue to not validate this level of support. As it continued down, there was no signs, and we continued to see it sell off more until we got to this area right here. We saw even more of a sell-off here on earnings, showing that it was not nearly as profitable as people had thought previously. And that is when you see the major sell-off. You see the bounce. This is the hook that we were talking about previously, is this area right here. You see a sell-off down here to roughly $80. You see a drive up, and that's about a 12.5% 12% return, and then you see it continue to sell off from there, an additional, another 9%. So at that point, even if you would have gotten in somewhere down in this range, let's say you picked up some shares right in here, you would have been down for quite some time, down about 12% to 13, maybe even 14% at its worst time. But we're talking about a over 10% decline in your account just by trying to buy the dip right here. Now, normally what happens, and this is what we saw right here on the charts, was that it did its consolidation phase. Again, taking a look here at the volume on the candles, big volume started to fade, volume was depleted, volume stayed weak, and we start to get the volume coming in. We see the spike. This is where we call it our consolidation period. We saw it retest the EMA, and then we saw this thing rip. And since then, we've seen a 42% return on this particular stock, and we've been able to roughly take advantage of over 20% profit on this particular play as of late over these past few days. Now, does this mean this particular pattern always happens? No, it does not always happen, but I can show you another example of where it happens and how often this does happen. Here's another company also known as Expedia, or ticker symbol EXPE. This is the 180-day chart here. And as you can see, this has had the same exact pattern. We saw this sell off. We saw the bounce right here. This was not as large of a bounce, but still a 4% bounce before we saw this thing continue to come down. Now, the difference between this and Beyond Meat was the consolidation period was shorter. We saw this only consolidate for maybe a week, if not two, and then we saw this thing start to come up and start to get more volume. As you can see, if you really did zoom in here a little bit more, you're going to see that the volume started to return. Then the volume started to fade back out, and you knew that there was going to be some resistance up here. And how did we know that? Well, if you look at the chart here on this 180-day chart, it was very apparent that this price point right here at about $114, $115 was the previous level of support, and that is where it was able to run up to before getting rejected and going through another consolidation phase. Now, at this point, in going through this consolidation phase, we're starting to see some movement up, but one thing that is still lacking in this particular chart is any sort of volume. What you'd be looking for, and what I'm looking for when I want to get into this position, is a break above this 115 level and be able to continue to ride that up. Otherwise, you could be in this for quite some time and not be seeing as much return as you would like to see. One more thing that I should probably mention before we continue with some of my top tips and tricks in order to swing trade and time the markets correctly is checking out my Young Money Investments private mentorship. The link is down below. In that group, I call out all my entries, my exits, where I'm getting in, when I'm getting out, and some of the reasons that I make these trades. I think behind every trade, it's great to make money, but if you can't do it yourself, really there's no point in being in the group. I think that's the cool thing about this group is there are multiple individuals that are able to make and call out their own trades. It is a great community, and if you're interested in really stepping up your trades and taking them to the next level, this is going to be a great group and a great spot for you. If you have more questions as well, please leave comments down below, or even feel free to shoot me a message in my DM on Instagram. The link is Young Money Investment. Now, one of the other big tools that I use, and this is not a very common tool, is using the futures market in order to time my entry and exits into any particular stock that I'm swing trading. Now, what is the ES or the futures market, you might ask? There's a related video somewhere over here that you can also watch, and it will teach you a step-by-step basic understanding and very good, solid fundamental knowledge of what futures trading is. But for those of you that aren't going to click on the video, it's simply put the overall market. Futures is a very liquid market, and that is usually what you see on the news when they're talking about the Dow is up 20 points or the NASDAQ and S&P are down 20 points, et cetera, et cetera. They're talking about what the futures values are on the overall market. So you might be going, Cameron, how on earth do futures affect the value of my stock that I'm trying to swing trade? Well, as you can see right here, this is a 180-day chart, and I apologize for all these price levels right here, as you can see, but this is the overall direction of the S&P 500 over the past 6 months or 180 days. As you can see, we have had quite the push up as of recent, and obviously as the markets continue to push up, we also see overall stock prices continuing to push up as well. Now, pulling this chart up, obviously on the 20-day chart here and the 1-hour candle time frame, we are going to see kind of the overall direction, and we can see where we previously topped out at highs and where we are finally breaking through and reaching new all-time highs. The ES is currently sitting at 32.91. Now, you're probably going, why on earth does this affect me, and why does this affect any stock that I'm actually swing trading if I'm not trading futures? Well, the reason in a nutshell that this is important for you to understand is that when the overall markets are up, most stocks are going to be up as a whole. Does that mean that your particular stock is going to be up? Absolutely not. But what it does mean is that when the market confidence is there, your stock itself is more likely to be up as well. You want to use overall market catalysts to influence and direct your trades. If the overall markets are going up, you would like to be long. If the overall markets are down and you're trying to go long, long, you're really going against the grain and going against the tide, which makes it much more difficult to be consistently profitable in that particular market, or honestly, any stock in the market in general. And one of my last secrets to swing trading the markets correctly is using the proper support and resistance. I cannot stress to you the importance of using proper support and resistance and understanding why it is important to not be long as you're approaching resistance, and then actually getting long after the break of pattern is actually achieved. And what do I mean by this? Here on the charts, we have an example of EA, also known as Electronic Arts. And as we can see over the past 6 months, the channel pattern here has been very consistent. We've seen the channel pattern riding basically between the lines of about $90 and topping out up here at about $100. This has been going on nearly for a year now until we finally have seen this break of pattern, kind of starting at the beginning of December. And as we can see right now, we are coming up on a new level of resistance. And you're probably going, Cameron, why on earth did you mark this out? And I'm going to explain that to you. This here is the chart of EA on the 3-year chart. As you can see, this gives you a little bit broader picture and understanding as to why this mark I had on there is at about $110, why there was support down here at roughly $90, and how that has played a role, because you can even go all the way back here almost 3 years ago and see where this acted as resistance before it broke the pattern, and where you can see that 110 mark had acted as support and resistance even previously based on previous patterns. Always drawing proper support and resistance is going to be key. The other thing too is you also need to understand that whole numbers are going to act more as a support and resistance. $100, for example, is a very large psychological number. $1, $5, $10. These are specific, understood psychological values for most traders, and this will be a number that most people will either want to get in or want to get out at. In this particular case, as we have been able to take value and take profits in this ride up, this is looking like a good area that you want to be getting out and running away like a scared dog. The way you'll want to get back into this position is if we saw a break above the 110 mark, and then we would look for our next level of resistance, which is going to be up here right around $117, if not $120. Now, one thing you'll also notice is that these numbers are not always a perfect number. That's okay. You're never going to nail the top perfectly, and you're never going to nail the bottom perfectly either. But one of my biggest suggestions in this whole strategy is taking a combination of everything that I've just taught with these 3 simple strategies and combining them to create a holistic approach and being able to nail the tops and the bottoms fairly close and fairly consistently over time. I hope you found that helpful, and if you did, please hit that subscribe button. It helps tremendously to be able to have more of a conversation with you on a consistent basis. What have you found to work really well for your swing trades? What are some strategies and tips, tricks that you've used in order to be profitable in the markets? What are some things that you're curious about and wanting to know about this particular strategy? I'd love to have a conversation with you down below. And if you have not checked out my private investments group called Young Money Investments Private Mentorship Group, that link is down in the description as well. From what I've seen out there, Young Money Investments Private Mentorship Group is one of the most hands-on interactive groups that I am able to work with people. A lot of times there are people out there that have too many students, too many people to work with and talk to, that it doesn't work out. This group is fairly small. I'd say we're roughly around 30 members right now. We keep these one-on-one interactions very close. And one of the great things about that is it helps you advance as a trader a lot quicker than in a large setting. One of the great things that I do as well in my private mentorship group is I call it my entries, my exits, and some of the things that I see that could be potential obstacles and problems in the coming weeks and months ahead. If you're interested, please check that link out down below, and I'm sure you will be in for quite a treat. Thanks so much for checking out the channel and the video, you guys, and I will catch you in the next one. Talk to you later. Bye.